Well, happy Wellness Wednesday, beauties, and happy Black History Month. I want to welcome you all to Feminine
Yes, yes. You know what?
Finance.
I forgot.
Yes, it's Black History Month, right? So we're over here making Black history as we speak. Welcome in, everyone. Let us know who's here in the chat. I know people are still coming in and logging in, but welcome to Feminine Finance with Mia James. And if this is your first time here, we want to welcome you to the place where it's safe for ladies to talk about all things finance. So, welcome in, and we keep our hearts at the forefront of everything that we talk about. So every week I break down concepts into simple terms so you can implement and start maximizing your money right away. And today I have a special guest, Mrs. Angeleen Harris, joining us. She is the founder of the Grow, Thrive, and Prosper Collective, and she is my tax strategist. So, I like to share people who help me with all of you that I love so much. So I believe that everyone needs a tax strategist because if you watched my Instagram live a few moments ago, you will know that I have had my fair share of tax disasters. Okay, go back and watch it if you haven't. But you definitely need a tax strategist if you are a business owner. So Angeleen, she is a strong advocate for the financial success of Black business women. Throughout her career, she's focused on helping women expand, flourish, and thrive by increasing cash flow, boosting net profits, and reducing taxes to ensure that they keep more of their hard earned money in the bank. And through it all, her rallying cry is financial literacy and strategic planning are key tools for success. So write that down. Financial literacy and strategic planning are key tools for success. Now, that is definitely quotable. She is committed to providing women with the guidance, resources, and support necessary to rise above the challenges of entrepreneurship, turning challenges into success to achieve both career and life balance. For Angeline, the most important thing is empowering Black women by giving them confidence and tools so they can have the ability to take charge of their financial futures and build lasting wealth. Now, if that's not a bio, I don't know what is. So, everyone, help me welcome Mrs. Angeleen Harris. And thank you so much, Angeline, for being here with us today. So, welcome. So, Angeline, would you like to share anything with the audience before we get started?
Thank you, Mia. Thank you, thank you, thank you. I appreciate you. Thank you for the invitation to share my knowledge and information with your community. I am here to support and serve. That's what I enjoy doing. Um, and this opportunity, I think, is going to be amazing. Hopefully, we'll have a good time tonight. I'll be able to answer some questions that they may have about taxes, about starting their business, about bookkeeping, accounting. That's where I serve. And just to share a little bit more about myself, I am an accountant by trade. I've been doing accounting for over 35 years. I'm aging myself. Wow. And I started my business, my personal business, when COVID was shutting down. I decided to open up. It was right then and there that I said, you know what? I'm not going back to corporate. I can do what I was doing for corporate, I can do for myself. Create generational wealth for myself, create income for myself that is not limited about how corporate wants to limit you, right? And so I took that leap of faith, I took that step and opened my business in March of 2020. And I have been growing and thriving ever since and thoroughly enjoy it. And this opportunity to share with your community, it's thank you. I appreciate that.
Well, awesome. Thank you, Angeline, because in the several meetings that we have, I've learned so much and I've been studying for a long time. So I just thank you for continuing to elevate my knowledge as a business owner. And yes, thank you. Jen says she gets a double dose of you today because she watched you live with Katrina and now you're here. So yes, so we're gonna
Awesome. Wonderful. Wonderful.
Yes, excellent. So we're going to jump right in. So my friends, the first question that I have for Angeleen, I'm going to ask Angeleen some questions, and then if you have questions, go ahead and put them in the chat. Okay. So the first question I have, so for someone who is brand new in business or just a few years
Mhm.
in, what are some of the foundational things they should do upon startup to ensure financial success?
Good question, Mia. That's a very good question. For those who are starting their business, the very first thing I always recommend when people come to me is making sure that your business is a legitimate business. And what I mean by that is registering your business in the state that you're operating in, at least at the LLC level. And even though a lot of businesses, can operate and sustain and do well as a sole proprietor, I find that it is beneficial legal wise to set your business up as an LLC so that you have some sort of protection from your personal assets, your personal income, your personal retirement from your business. And a lot of people don't think about that. Like, and I was just sharing this on our last podcast that, people are so happy. And if they can sue you and take you for everything you got, they will. And registering your business as an LLC gives you that at least some type of legal protection where they cannot come after you personally. They cannot come after your personal assets, meaning your retirement, your house, your properties, your W-2 income, all of that. So you can have some type of protection. That's number one. So if you're starting out, register your business if you're really considering your business as a legitimate business. It's not a hobby, but you are in the pursuit of income. The IRS looks at a business as a legitimate business, IRS code 162A. If you guys never heard of this is where you really can protect yourself and really put a pin in your business that you're legitimately operating as a business. IRS code 162A says that if you are in the pursuit of income, meaning making money in your business, you have the right and the ability to write off certain things in your business to offset that income. And so I always use that as a basis for those who are starting their business to set it up as a business, okay, and have some type of protection. Second thing is get a EIN number for your business, a tax ID number from the IRS, so that when you're doing your business, everything is operating under the EIN number, not your social security number. Because if you're operating under your social security number, you open yourself up to, you know, uh, litigation, and people come after your personal um, assets and things like that. Okay. So get an EIN number from the IRS. And then the other thing is make sure that you have, we just talked about this, my other podcast, is to be able a way to track your business income and your expenses. Okay. And I always suggest a systemized bookkeeping software of some sort. The days of tracking your income and expenses on Excel spreadsheet or a Google Doc, or just keeping your receipts, or going by your bank balance in your bank account is not a viable way to have a successful business that's going to be able to scale, that's going to be able to grow, thrive, and prosper. So those are at least three basic things. Okay, setting yourself up as an LLC, getting your IRS EIN number, so you're operating under a totally separate tax ID number, not your social security number, and get yourself a bookkeeping system to track your income and expenses. Three
Wonderful.
basic things.
Perfect. So I put those on the screen for everyone just in case you did not get them. And I was typing so fast, so excuse my typos. Register your business at the state. That's supposed to be state level. I can spell. I was a spelling bee champ. I promise y'all. Um, and then get an EIN with the IRS,
Hmm.
and also to make sure you have a way to track your business income and expenses. And Halo Creative Lab says QuickBooks. I was like, yes, I'm a QuickBooks fanatic. It is fantastic.
Yes.
And then we have
Yes.
another question about your first recommendation from Natasha. And she says, what is the difference in setting up your business as a DBA versus an LLC?
So a DBA is doing business as, and a DBA, you're just basically registering like in your local city. Um, if you have to have a city compliance of registering your business to operate in that city, you're doing a business as, which means you're registering you as an individual working in a place, but then you were registering that business name as well tied to the individual. That's basically at a city level when you're doing a DBA. The state level is when you go into an entity type, an LLC, a partnership, a C Corp, S Corp type of entity.
Okay,
Hopefully that makes sense. Because
yep,
anybody can do a DBA, register, with their city council,
yep.
council, but their city, and publish your company in the paper for 6 weeks or whatever, and say, I open a business, and there you go. So doing a entity, registering your business at an entity level, at a legal level, is different from a DBA.
Yes, and I actually have I have my LLC, which is beyond the business, but
Hmm.
sometimes when I'm doing different contracts, I have to do it under my name, my personal name. So my DBA is my name, because some um
Right.
companies or organizations, they won't do business directly with an LLC. They have to do it with a person. So that's when I use my DBA, but my
Person. Hmm.
DBA is connected to my LLC. So um
Right.
yeah. Excellent. So, thank you all for these wonderful questions. And let's go on to our next question. So, I just went to a class and learned all about these new the proposed Tax Cut and Job Acts of 2017 changes, right? We all know we have a new president, and there's some changes coming down the pike. So, if the Tax Cut and Job Acts of 2017 is not extended, and these things start to change, can you share what these changes will mean for business owners if they're not extended?
Oh man. you know, this is a whole new era of business that we're going to be going into with this new administration. I'm not, honestly, tell you the truth, I don't know what to expect because things are changing so quickly and so fast without any specific direction. And I'm kind of hesitant to say, what to do or what not to do. At this early stage in the game right now, I would just say, just keep doing what you're doing for right now, making sure that how you're operating your business is legitimate, um, that you know what you're doing in your business, that you're recording everything in your business, from not only from the financial side, but also from the operational side of the decision making, the plans that you have for your business. If you're projecting out what you want to do in the next 2 years, 3 years to grow and scale your business, you may want to really look at that and see how that's going to be affected by this new administration. Because they're talking, especially if you're in the commerce business, doing a lot of um, dealing with products as opposed to services. And if your products are coming or being, produced in a different country and things like that, because we're hearing about these tariffs and things like that, added taxes that is going to affect a lot of business. You want to going to look at that and look at and just try to get a pulse of what that's going to look like for you in your business to try to grow and keep up with the market. If there is a change in tariffs and taxes and what's going to be limited coming into the US, what's going to be limited going out of the US and things like that. It's honestly, I cannot say. I don't even have a pulse on it because things are changing so quickly and without any real basis and a clear direction of what's going to happen at this point. So right now, I would just say keep your eyes open, ears open, and be ready to pivot to protect your business so that it can continue to grow, that you can continue to survive in your business, um, and just keeping a pulse on your numbers. Right now, I would not do a lot of extended or overextend yourself in purchasing a lot of equipment, or I wouldn't say materials, I should say, for your production. But then again, depending on where you are in your production, you may want to purchase some things now if you need to um, secure prices now and
Mm-hmm.
get that in your inventory now before things change 6 months, 3 months, 6 months down the road. So it just depends on where you are. And so you just need to put eyes on that and understand what that's going to look like for your business. Do you invest in it now and get it while you can? And if you have not invested in certain materials and you want to do certain projects or extend services or products in your business, and you haven't invested in those type of materials just yet, hold off on it, because if you don't know what it's going to look like, you don't know how much you're going to be paying for that. So it's going to take some strategizing. Like I said, we don't know where we are. We don't have a plan. We don't have a clear-cut understanding of what's going to happen. So I would say be conservative in what you're going to do. Um, if you haven't invested in like products and things like that for your business. Um, I know in some of the TCGA things are going to go away, like depreciation, bonus depreciations, and things like that. And if you, again, that's a strategy you want to look at, that it's not going to be available. So, tying your money up into things that you thought you'd be able to write off immediately, and take depreciation on it up front and get some tax savings on that, you may not be able to do that. So that's a loaded question that you asked, Mia. So it's really hard to give a pinpoint answer other than you all just keep your eyes open and your ears open and keep a pulse on your business and the plans that you have set for your business for 2025 and going forward, to see how it's going to pan out for you.
Thank you for that.
Sorry,
Because
I don't have a more definitive answer because we just don't know where we are. Things
right.
are up in the air and they're changing consistently. So it's just hard to give a clear cut answer on that.
Well, one thing that you mentioned that's crucial is like the impact of tariffs, right? So if they're putting tariffs on places like Mexico and China, and you get if you
Yes,
have a product-based business and you're getting products from those
yes.
countries, that can drive your cost of goods sold up, and then you have to increase your prices, and
Your
there.
prices, right.
Yep. And so those are some things you have to think about if you have a product-based business. Again, if you're buying
Mm-hmm.
depreciating assets and you don't already have them, you may not be able to depreciate it over the amount of time you thought you could. So I would
Right.
recommend looking at the Tax Cuts and TCGA, Tax Cuts and Job Acts of 2017, and just kind of see what you can take advantage of now, because if they don't extend it, those things are going to change. So that's important.
Exactly.
Yep, that's super
Yes, and
important.
2025 is the last year for a lot of the that a lot of things sunsets, that it's going to go away after 2025. So,
Yep. So yeah, it's super important. So thank you for that. We do
mhm.
have a question from the audience. This is from Jen, and she asked, she was told she could write off purchases for her business on her taxes, but she hasn't made revenue yet. So how would that work? And would she possibly get a refund um, if she didn't make any profit in 2024?
Okay, let me understand this. I Okay, so yes, you can write off if you're starting up your startup costs in your business. You can write that off as a business expense and take a tax deduction on that, even though you don't have a revenue coming in. It is called startup costs. And IRS, I do understand that there's upfront cost to start a business, and you haven't generated any income yet. Um, so you're able to write up to a certain amount. I believe it's 25,000, if I'm not mistaken. You can write off up to $25,000 of that upfront startup cost. And to say that you're going to get a refund, it's hard to say because I don't know your entity structure. I don't know, what your individual taxes going to look like. Are you an S corp where your net profit and income is flowing through into your 1040 tax return, or your LLC business, that still flows into your. I don't know to say if you're going to get a refund. I can't answer that, but you can write off your startup costs even though you're not generating any income, especially in your first year. So that is legitimate business expense and a legitimate write-off, tax write-off.
Awesome.
Now, again, I can't say whether it's going to produce a refund for you. I don't know. I can't answer that because I don't know your personal tax information.
Thank you. Very, very helpful. It's very good to know startup cost for all my new folks. Make sure you keep good track of that and write it off.
Please,
Please,
yes,
exactly. Please keep
please keep, please keep records and detail on your receipts, your records. What it's for. Be specific about it, of your expenses that you're investing into your business, and you are thinking of it as business write-off or startup cost, but actually some of that can be considered as your capital investment into your business, that you're purchasing these things, and these can be placed on your books as an asset within your business. Okay, and that, depending on the cost of those, some of those things you may be able to depreciate or write off immediately, but that will have an effect as well in your business when you're doing your finances. So make sure you're keeping detailed records of what you're spending to start up your business. Starting up, let's say, paying your LLC fee, registering your business as an LLC or S corp, whatever state that you're having to register in. If there's a fee, that's a business cost. That's a tax write-off. If you are um, you're advertising for your business, that you're in business, that's an business expense, a tax write-off. So you just want to make sure that you're keeping receipts, detailing it with what it is, and please do. I know there's times when you're starting out and you're using personal funds to purchase these things. Even though you're using personal funds to get it started, put that personal fund inside your business first, and then use that money inside your business to pay your your expense of startup. Does that make sense? So let's say that you're starting your candle business, right? And to start your candle, you need to do your DBA, register with the state. Um, you have some products that you need to purchase, materials and things like that. instead of paying it with your personal credit card, instead of paying it out of your personal bank account, what you'll want to do is take that money from your personal account, open you up a business account, okay, and put that money inside your business account, and then make your purchases, your business purchases from that business account. That's called capital investment. You're investing into your business. Okay, it's easier to track that way your business expenses. Then it won't be considered that you're commingling, your business with your personal, um, and it'd be easier to track. So make that a habit. Make that a rule of thumb that anytime you are purchasing something for your business, it's always coming out of your business account. Even if you have to transfer money from personal into the business, pay it out of the business. Try not to pay it from personal credit cards and personal expense, personal checking account and bank account.
Excellent.
Limit that commingling of funds.
Yes, please do not commingle the funds. Go get you a business bank account. It's free. And
It's free.
it's free. Like get one with no fees. So
There
that
you go.
clean records. Keep it clean. It's its
Hmm.
own entity. Think of it as a separate person.
Yes.
Excellent. So we have another question before I go to my last question. So Natasha wants to know, is an LLC the best entity for a business owner that's only online, for example, digital products, educational services, etc.?
No, no. Um, I wouldn't say it's the best entity. It just depends on, I want to say, it just depends on what you're doing in that business. Okay. It's good to start off as an LLC because then there you don't have a lot of compliance that you have to do if you are an S Corp or a C Corp. Because being a corporation, there are other compliance, tax compliance that you will have to adhere to, and business wise as well. Being a corporation, it's just easier to start as an LLC, and you're not under a lot of compliance having to do certain things when you're starting out. So I wouldn't say it's the best way. I would just say it's more of the easier way to get started and up and running.
Excellent.
And if you're finding that you're um, and I would say it's the most a cost effective way as well. Okay, starting with the LLC.
Awesome. So one question I had, and then after this, we'll have two more questions in the chat. What would you say are the top 3 strategies that business owners should know when it comes to their taxes and reducing tax liability?
Number one strategy: get a strategist. Because there is, and I'm not saying that facetiously either. It's because there's a difference between a tax strategist and a tax preparer. A tax preparer is obligated to file your tax returns, meet certain requirements, make sure that what they're reporting is correct, that is in compliance of what the IRS wants to receive, um, at a basic level. Just because they are a tax filer, preparer, does not mean they understand the tax laws and codes and how to leverage them to your advantage to reduce your taxable income. Even CPAs, there are CPAs who are basically, accountants, but if they're not focused in or honing in or specialize in taxes, they're even limited about their knowledge of the tax codes and laws and what you can do and how you can leverage them and to your advantage. Some of them are they're conservative. They don't, take a little bit of risk or understand how you can put a few strategies together to reduce taxable income, and they think, oh, you can't do that because it doesn't make sense in their mind or their knowledge of understanding. They may think it's illegal. But with a tax strategist, we understand and we look at the laws and the tax codes, and we formulate plans that will benefit you specifically for your business, for your family, for your estate, for your financial position specifically. So it's not always a broad thing in planning. It gets down to strategizing specifically for where you are, what your goals are, what you want to do, what you want to accomplish. And so that takes um, knowledge, that takes specific understanding how to put plans together, to put strategies together to make it work on your behalf and in your benefit. Okay. So there is a difference between a tax filer, filer who files your taxes. There is a difference between a CPA who even files your taxes, and there is a difference between a CPA and a tax strategist. So the tax strategist really hones in and leveraging tax codes, tax laws, and putting plans and strategies in place, not just going down, checking the box, okay, we put this number here. Yes, you're able to deduct that. Um, yes, you can add this, to your tax. They don't put a plan together to look in the future to see how you can really reduce taxable income. That's the whole bottom line, is legally leveraging the tax code to reduce your taxable income according to the tax laws. We're not trying to, you know, um, we're not trying to use the tax codes and laws in a negative way, but use it to your advantage. And it's legal and it's right. And that's what the big boys do. You got to learn how to play the game with the big boys. And
Hmm.
that's what they do. They know how to leverage, they know how to plan, they know how to strategize, they know how to, put different strategies together to accomplish certain things.
Yep.
That's all it is.
That's excellent. Y'all definitely listen. If you didn't catch anything, make sure you caught the difference between a tax preparer, a CPA, and a tax strategist. I have been through all three. I have arrived at the top now because I've had horror stories. Okay. So make sure you get a strategist so that you start out on the good foot, or you get on the good foot. Okay. So I
Get
put
on a plan. Yeah.
get
Hmm.
on the good foot,
Right.
right?
Get on a good foot.
I put
Yes.
Angeleen's a link so you can schedule a 15-minute consult with her.
Yes.
Um, let's see the last two questions we have. So Jen wants to know, are there a few categories, capital investment, capital asset fees, subscriptions, that you typically use with clients?
Few categories, capital asset fees, subscriptions that you typically use with clients. I'm not quite understanding the question. Can you, can you provide a little more insight, Jen? Is it my
Okay.
screen freezing? I'm
No,
sorry.
it was me as usual.
Okay.
um so for Jen, I was just asking if she wanted to know if those are the categories she uses to track her expenses.
Oh, okay. Track expenses. Um,
It's a lot of
yes.
categories, honey.
Oh, there's a whole bunch of categories, but that's one
Yeah.
of few. Yeah, that's one of many. Capital investment, your assets, fees that you're paying, subscriptions. Um, yeah, there's so many, like your marketing costs, advertising, if you're paying an assistant, salaries, your office supplies. Uh, oh my God, there's so many categories. It's hard to name them all, but at least you did hit some of them that you can use to start categorizing your expenses. And if you use a software, Jen, a lot of the software has business expense categories already preset for you, and you can use those. And then you can also add additional type of categories that may be specific for your type of business or specific for your type of industry that you're working in, that you can categorize and track those incomes and income streams and expenses, even at a more detailed level, because you have a separate category for those. Okay.
Okay.
I
And
was
then
told
here's
that she had to register. Uh-huh. It depends on the bank. Um, so you are able to go to a bank and open up a bank account under your Social Security number, entitle it as your business bank account. Um, but if you want to open a business checking account, the bank is going to want to see your EIN number that you have registered with the IRS. They're going to want to see um, your business operation agreement that you have set up a business, and that it has been notarized. And in that business operation agreement, basically saying, I, Angeleen Harris, am creating a business called Grow, Thrive, Prosper. And within Grow, Thrive, Prosper, I will be providing this level of services or products. My business will be ran on a cash basis. So it is a legal document um, that you can find easily if you go to lawdepot.com, and you can, even if you use the free version, I think lawdepot.com allows you to download at least three legal documents for free without having to pay their subscription, and set up your business operating agreement. And then if you are registered, if your business is registered as a type of entity, whether it's an LLC, C Corp, S Corp, partnership, yes, the bank is going to want to see that documentation as well.
that's
So at least those three things, okay? Your EIN number, your entity documentation when you're registered with the state, or even registered with your city that you have a DBA, that you have a business license that you're operating under, and your operating agreement, your business operating agreement.
awesome. Thank you so much, Angeline. I think this was super helpful. Let us know in the chat, and give Angeline some praise and a round of applause, because I know we
Thank
can't see
you.
you on Zoom. So I just want to say thank you again, Angeline. This is, again, I
Oh, you're
learned
welcome.
new things like every time you open your mouth. I'm like, oh, this is really good to know. So this is
Thank
great.
you. But you're welcome, welcome, welcome. And like I said, I am here to serve and support. And if I can continue to serve and support your community, feel free to, like I said, um, connect with me at meetangeline.com and just have a discovery call, even just to point you in the right direction, and just to bounce your ideas off to see if you're going in the right direction, if you're starting up your business, or if you're looking to scale and grow your business. Um, it's just always good to have that second ear, you know, additional support there. So I'm here to serve and here to support Mia and her community. Thank you, Mia, for inviting me. It's been a pleasure. The community asked some great questions. So they sound like they're, ready to either dive in a little deeper to get their business going, or to even scale and, um, grow their business and try to keep some of that money in their bank without paying Uncle Sam too much more money.
I'm trying to tell you, listen here, like you
That
said earlier, mind your business. So next week we're gonna have one of Angeline's partners on, but everyone mark your calendars. And I know a lot of people left already because we have a book club like at 8:30, but um
okay.
there's business funding next week is at 7:30. So normally I'm on at 8. So set your clocks back for 7:30 next week. If you are a business owner and you want to learn how to leverage OPM, other people's money, you need to be on next week at 7:30 to see Katrina. and one person will potentially walk away with some business funding from the live. So make sure you're
Ooh, wow.
yes. So make
How
sure you
exciting.
exactly. Well, thank you again, Angeline. It's been such an honor to have
You're welcome.
you on, and I look forward to talking to you again real soon.
I'm here to serve. Thank you, thank you, thank you.
You're welcome. Good night.
Good night.
All right.